welcome to the Nexus Dispatch by Summer Atlantic Capital. I'm Abhishek, your host. Today we're discussing something that's quietly but fundamentally reshaping global markets, how artificial intelligence is influencing capital flow in 2025. So this isn't just about startups or headlines. This is about where sovereign capital, institutional investors, and long-term money are actually going. Joining me today is Mr. Sebright Chen, CEO of Summer Atlantic Capital. Sebright, great to have you with us.
Great to be here, Abhishek. Looking forward to the discussion.
So, Sebright, before we get into AI and capital flows, I want to zoom out. For SAC's perspective, this doesn't feel like a typical tech cycle. What's really happening beneath the surface?
You're right. It's not a normal AI boom. What we're saying is a structural shift driven by three forces. First is compute scarcity. Everyone talks about models and data, but the real bottleneck is access to chips, energy, and infrastructure. Without compute, AI is theoretical. Second is geopolitics. AI is no longer just a technology discussion. It's a national strategy issue. Countries are competing on control, not just innovation. Third is sustainability pressure. AI is energy intensive, and investors are increasingly asking whether these systems can scale responsibly. Together, the three forces are reshaping how capital moves and who it moves toward.
So capital is reacting not just to innovation but to constraints and controls?
Exactly.
One of the trends SAC has spoken about is the rise of sovereign AI funds. What's driving governments to move from regulations into direct investments?
We're seeing governments treating AI infrastructure as a strategic asset. In regions like the GCC, Singapore, and Japan, AI is being embedded into national development and industrial strategy. The key idea is simple. Compute infrastructure is a new strategic leverage, much like oil pipelines or shipping lanes once were. Governments want control over data centers, cheap access, and national AI platforms, not just the returns.
And how does that change capital behavior?
A few clear patterns. Governments co-investing with private capital. Less focus on short-term AI startups and more emphasis on long-duration infrastructure and cross-border compute access. This isn't speculative capital. It's strategic, patient, and policy-aligned.
Let's talk about energy. AI is powerful, but it's also power-hungry. How is that affecting investment decisions?
Energy has become unavoidable in AI underwriting. We're seeing capital shift toward energy-efficient AI architectures, low-carbon or optimized data centers, and smarter workload design rather than brute force compute. The mindset has changed. It's no longer AI first, sustainability later. If it's not efficient, it increasingly doesn't get funded.
So ESG is no longer a checkbox?
Correct. ESG is now embedded in the investment math. In 2025, sustainability doesn't slow AI, it determines which AI wins.
As we look ahead, what are the key takeaways investors should be thinking about in 2026?
We see three major conclusions. First, access to compute becomes a real competitive advantage. Not everyone will have it, and that will shape outcomes. Second, policy and technology must move together. Capital avoids regions where regulation, infrastructure, and execution are misaligned. Third, green AI becomes mandatory, not optional. Efficiency and sustainability will be baseline expectations. The next wave of capital won't chase hype. It will follow infrastructure, alignment, and long-term intelligence.
Well, that's wonderful. Thank you for listening to Summer Atlantic Capital's Global Insights. Subscribe to our weekly newsletter and join our global community as we lead the transformation into intelligent capital markets. See you all in the next week's podcast. Until then, it's your host Abhishek V signing off.